Well, Shanghai stock market is red hot. It is blazing hot. More than 4 million investors opened new accounts to trade last month, and the surge in interest has helped the Shanghai Composite Index soar to its highest close since March of 2008. As Zhang Jian reports, the gains come despite China's slowing economy.
The A-shares were flying high in March. The Shanghai Composite Index rallied about 12% during the month, while the benchmark index rose about 14% over the entire first quarter. Despite the number of new investors rushing into the A-share market in the past few weeks, white-collar workers in Shanghai's Lujiazui financial district are surprisingly cautious.
I think the March rally is really just an extension of previous gains. Market sentiment in March wasn't bad, but it hasn't been as dramatic as that in 2006 and 2007.
I think it's speculation. I'm not interested.
The Shanghai Composite rallied for 10 straight days in March to a 7-year high, while most economic indicators, including manufacturing PMI, industrial output, and property prices, were telling quite the opposite story. Yang Xiaolei, strategic analyst at Hua'an Asset Management, said the market this month has been driven by liquidity and policy direction.
I think the market rallied because a large amount of capital was moving in at a faster pace. According to data in the last 2 weeks, more than 500 billion yuan has been channeled into the stock market. And that move is backed by regulators' changed attitude towards capital moving into the market. And that includes the central bank.
China lowered its GDP growth target to around 7% this year, the slowest in almost 2 decades. Despite the fact that China's surging growth rate is contracting, there are definitely investors who believe there will be quality investments available as China's economic structure shifts to more long-term stable growth.
I see this as a process of securitization of Chinese saving. I will be looking out for good companies in which to invest.
Although the macroeconomic environment is not very cheerful, there are still some good companies worth investing in.
Analysts like Yang Xiaolei are warning of market corrections in some sectors during the second quarter, however.
Growth companies gained tremendously in the first quarter, but there might be some changes in the next quarter. The gains of the Chinex and the SME boards already started to narrow last week, while blue chips related to the One Belt, One Road initiative surged in a very short period of time, driven by government policies. If liquidity remains sufficient, we expect heavyweight shares will perform well in the second quarter.
The Shanghai Composite Index closed at 3,747.9 points on the last day of trading in the first quarter. During the stock market bubble back in 2007, the index rallied to almost 6,000 points. Zhang Jian, ICS for CCTV, Shanghai.